Guys, tonight on Dealmaker Nation, we'll be talking about how to get out of your backyard, go somewhere else, go where the deals are happening. A lot of you guys are stuck in your own market. There's no deal volume. There's no deals happening. It's a really tight market, super tight supply. How do you get out of the backyard, find deals where they're happening? It's all about tonight. Tune in next. All right.
What's up, Josh?
Tonight I'm joined by Robert Wensley, CEO of InvestorLift, the hottest platform in the nation. It's blowing up. Robert, where are you right now?
Dude, I'm stuck in Key West. I came down here for a conference, invite only, all the biggest real estate gurus in the country. I mean, anyone. Carlos Reyes was here, Don Costa. We had guys here that were making $250 million a year. Like the legends going back, like not just the legends right now, but like the legends going back like 30 years. It's absolutely incredible. But this is like this massive storm that just hit Florida and everything is shut down for the next 3 days. So we are stuck down in Key West until Tuesday. So yeah, great time. You know what I learned though at this conference? You know what my one key takeaway was?
What's your takeaway?
So I was talking to a lot of these guys that have been big in the education space, and they're like, dude, you got to just give. And I feel like I've held back a little bit on some of the stuff that we've been doing to help companies hit $1 million or $2 million, or some are on their way to 10 million a month in assignment fees earned. And tonight, based on that feedback, we're going to start giving by pulling the curtain back and sharing some stuff that no one has talked about. Like no one talks about this stuff. Everyone kind of keeps it a secret. And just based on being on this conference and the advice I got from some of the gurus that have been in the industry making $250 million a year, I think we're going to drop some bombs tonight.
Awesome, man. We got to get into this. We had some audio issues a couple hours ago. I apologize. But tonight we're going to get into the data. We're going to see why InvestorLift is blowing up and why clients of InvestorLift, like myself, got out of the DC market, got out of my own backyard, got into 18 markets, and we're crushing it right now. And I want you guys to crush it. So without further ado, man, let's give the people what they want.
Let's do it.
Hopefully you guys can all see my screen. Tonight, it's going to be all about how do you choose the right markets to go into as an investor, especially guys when it's a red hot, I don't have to tell you, it's a red hot seller's market right now. So how do we find the deals when it's so hot like this? To recap last week, we talked about what a successful wholesale operation looks like. And a lot of you guys are not quite here yet. Some of you guys already are here yet. But at the end of the day, the engine that makes this whole thing go is your lead generation. It's the front of the bus. So we want to make sure the front of the bus is working like clockwork, and that starts with your market selection. So the difference between the rock star wholesaler, in my opinion, and the struggling wholesaler, the inconsistent deal flow, a lot of that has to do up front with that market selection. Like myself, I used to be 100%. Limited by 20 deals a year, 30 deals a year in Northern Virginia, which, you're the shark in the pond if you're doing that much volume.
Josh, you had one day this week. How many deals did you? You did four in one day, didn't you?
We had 5 in a day tied up.
5 in a day. Think about that, guys.
This would like 6 in a day in one day.
Damn, that's insane. If you're watching this, think about what your business would look like if you're signing up 4 deals in a single day. If you're disappointing 6 deals in a single day, think about the impact that would have on your bottom line. What would your life look like if you could do that every day, or even every week, or even every month? Right? Absolutely incredible. You crushed it, Josh.
And it starts, guys, with, don't be like me. Like I thought that real estate investing had to be my backyard. I thought that way for 8 or 9 years. So get away from that mindset. Your backyard is the USA right now. And if anybody, Robert, I mean, you've seen all sorts of clients, their backyard is the USA right now. I mean,
yeah, by the way, I'm going to throw some backstory on why we're touching on this topic. This goes back a few years. I haven't really talked about this publicly, but when I first joined Express Home Buyers back in like 2015, you know what sold me on joining the company, Josh?
No, actually.
The vision. So Brad, he told me, he said, I want to turn this company to a nationwide house buyer. I want to buy houses in every single state across America. This is your chance to get in on the ground floor while we're just in one market and help me go scale it nationwide. I was like, damn, that sounds like an opportunity, right? And we tried it and we got our butts kicked. We got our butts kicked real hard. We completely failed scaling. We were crushing it in one market, doing 7 figures a month in one market. But as soon as we tried to expand, we just got our butts kicked. There was a few reasons why, by the way, which I will touch on as we get through this, of why we failed. And all of those reasons I built Investor Lift to solve that. And we've been testing over the last 18 months. And we've now created the tools where literally it doesn't matter where the deal is. You can close deals anywhere in America. Nick Perry, great example. He moved deals in 45 states last year through Investor Lift, right? So if you have the right tools now, you don't need to be doing deals in your backyard. I got clients where even if the house is 5 blocks away, they sign it up completely virtually. They never see the house, So if you're signing up stuff 5 blocks away, you're not even seeing it. Why not sign things up 5,000 miles away? Doesn't matter. So we're gonna be touching on that tonight.
And especially now, I mean, when folks are struggling to get deal volume in a market like Washington, D.C. or in L.A., why not go beyond your backyard if the deals are out there?
Yeah.
So
absolutely.
So guys, we're going to start tonight with defining your buyer avatar. And this is, by the way, this is cutting edge material. We've never presented this to anyone before. So you guys are in for a treat tonight to see what we've been up to. So this is my personal experience, and I want Robert to chime in, but when we first went to the virtual model last summer, we hadn't done a lot of wholesaling over the years. We hadn't dealt with a lot of assignment fees. The process was all sort of new to us in some sense, especially working in other markets. And what I found with our team was if you're new to the game, you probably don't want to be where the sharks are in the waters. So you're going to come across these big local brands that buy houses. You're going to come across these mega buyers, hedge funds, and so forth that buy houses. And on Investor Lift, they have really high buyer scores. But in my experience with our team, those buyers are extremely savvy. And if you don't have your systems together, they're going to whittle your fee down to the point where a lot of them, not all of them, but a lot of them will try to whittle you down to the point where you don't make hardly anything.
Josh, that is if they don't hang up on you. A lot of amateurs, if they get on the phone with a hedge fund manager, a lot of times they'll get hung up on real quick because they don't know how to. Because to be honest, they don't give a fuck about you. All they care about is making money. Okay, so if you get on the phone with these guys, and you don't start off the call with "Here's how I'm going to make you money," they're just going to hang up on you, right? Because they're getting bombarded. They're getting 200 calls a day.
And right. And if you're lucky, they're going to tell you one time what their buy box is, and if you start bringing them stuff that doesn't meet the buy box, they're not answering your phone anymore.
They will block you so fast. They have to. They have to. They don't have a choice. They're getting bombarded with deals all day, and if you send them something that's not in their buy box, you will be blocked. Your calls will not be answered.
So the recommendation for you guys tonight is start where your experience level's at. So if you're newer like we were last summer, don't make the first call to a hedge fund taking down 40 deals a month in 18 markets. Maybe don't even make the first phone call to the local mega buyer who's doing 100, 200 units a year. Like a place like Robert used to work. I mean, they will not take you seriously very quickly if you don't know what you're talking about. So my experience to you is focus on the scores, buyer scores and Investor Lift that are under 25,000, the mom and pop shops that are smaller. newer, the part-time, the solopreneur investors, that's where you can kind of, break your way into the market, feel your way out, figure out your sales process, figure out your negotiation process, figure out the whole mechanism behind your business. You don't want to be, playing games with these more experienced buyers, because they, as Robert said, they will just shut you down.
They'll eat your lunch.
And you really don't want to burn your bridges early on. So in order not to burn bridges early on, on this screen, all we're telling you to do is, if you're like we were last summer, stick with the bottom half and sort of work your way up. And the last, I would say since January, that's when we've been focusing on the much bigger buyers the last 4 months, roughly 4 months now.
By the way, can I say something?
Absolutely.
I'm going to tell a story. If I was watching this right now, you know what I'd be thinking? Even if I'd done one deal, screw that. I'm different. I'm going to go straight to hedge funds. Yep. That's what I'd be thinking if I was watching this.
Yep.
I'm going to tell you a story. I lived in LA last year. I wanted to learn how to surf. And I'm watching videos online. They're like, oh, you should buy a longboard. And I'm like, man, I'm seeing the pros riding longboards. I want to get a shorter one. More maneuverability. I go to the surf shop and I'm talking to the guy. And he's like, how many times have you been surfing? I'm like, yeah, I've been surfing twice, on longboards. He's like, okay, well, let's get you a longboard. I'm like, no, I want a shorter board. And he's like, no, you don't want a shorter board. You want a longer board. And then after a while, ease your way into a shorter board. After you've been surfing for a year or so. No, you don't understand, man. I learn fast. I'm a very ego-driven guy. I got a big ego. Don't worry, just give me the short board. He's like, no, you shouldn't buy the short board. I'm like, no, just sell me the short board. Who cares? You're going to make money. Sell me the short board. I'll be fine. Thinking that first day, whatever, I'll figure this out. It can't be that hard. I go and I buy the short board. First day out on the water. Ask me how many times I got up.
0.
You know what I had to do? I had to return that board and buy a longboard. So just when you think about if you're a beginner and a lot of us, the people that get into this industry, we're all very ego-driven. We're all very cocky. When someone tells you go for the longboard, go for the longboard. Because otherwise you're going to be trying to do a return like I did because I'm an idiot.
Yeah, believe me, you don't want the top buyers in the country not answering your phone calls. So
yeah, you don't get a second chance.
You really don't. So the next selection, once you guys determine what buyers you're going to work with, the next selection is what market size you're going to go with. And for those of you guys who are already in a major primary market like a Washington, D.C., you know how competitive this market is right now. Primary markets like this, deals move really quick when you get them. The buyer scores go all the way to 2 million, the top of the range. So my recommendation for you guys, if you're looking to get away from the competition, especially if you're newer, you want to get more deal flow going, focus on the bottom of this chart in terms of market size. The tertiary markets, the smaller towns even, it's a lot easier to get a deal. And if you're new to the game, talking to sellers in those type of places, it's a lot easier to develop a sales process when you're talking to somebody who's a lot more open to listening to you versus he's already had 20 calls from 10 of the top buyers in your city already. Robert, what could you add on this?
I'm gonna add somebody onto this. So Nick Perry and his team, they move deals in 45 states. They won't touch markets with less than 150,000 people in that market because it takes them too long to move the deals.
Right.
Okay, so the one caveat I want to throw on here is it's way easier to get deals. You can get deals like nobody's business if the MSA has less than 150,000 people. But just keep in mind, you need a really deep discount if you're going to buy in those markets. And even if you do get that discount, they're going to take time. But when you're first starting out, guess what? You have a lot of time. You don't have a lot of money. And the big buyers won't buy in those areas because it takes too much time. They want super fast cash conversion cycles. And they have certain cash conversion cycle metrics that we're trying to get them to hit, right? Yep. And they can't hit those in those markets. So that's why they stay up, because they're like, hey, this is a KPI I got to hit.
Yep.
If I can't hit that in that market, it's excluded de facto, right? Because they can compete in the big markets. They have the money to do it. They have the money to spend. But this actually creates an opportunity if you're smaller, though, because the big guys won't do it. Therefore, it opens up the opportunity for you. But just keep in mind, though, it is way longer cash conversion cycles.
I would say this, like when you guys are newer to the game, you haven't done a lot of deals, you've done 10 or 20 or less than that deals, to train your team and to train yourself to get the process right, to get the conversations right. It's a lot easier to train in these smaller markets than it is to train in a place like Arlington, Virginia, where they've already talked to 4 of the biggest buyers in the market who have their stuff together, who have their sales process down. They're going to hang up on someone who's less experienced if they smell blood in 30 seconds or less. So for our team and for myself, what I see is, like, if you're newer, it's easier to get your foot in the water and make a little bit of money. And like Robert says, you may not want to stay there forever. You probably don't. But for training purposes and to get your foot in the water, it might be a great place to start. And it is going to be a long cash conversion cycle for sure.
Absolutely.
But I guess, so Nick is mostly primary, secondary at this point, I would assume, right?
Yeah, I mean, he's doing hundreds of deals. So anyone that's doing hundreds of deals is going to be 100% pretty much focused on primary and secondary. But that's actually what creates the opportunity for beginners, is because the big guys are not playing those secondary markets, or the tertiary.
He's smaller, like he's got all his stuff together. He's got all A players on his team. They all know
7 years. It took him 7 years to get there. Until last year, he was playing in those smaller markets. Last year, he after 7 years, he said, "No, I'm not doing it anymore. I'm only doing primary and secondary."
I can tell you guys, like, my advice tonight, like folks on our team that are new, I don't want them taking my best leads. So if it's one of our best leads in a hot market, we got to have the experienced people taking that deal. If it's coming in from some random area, though, it's great training, awesome training, and you can make some money. It's not impossible. But like Robert says, don't stay there forever.
No.
We're going to get into good stuff soon, guys, so bear with us. The third thing you got to determine is, what are you hoping to make as a wholesale fee? So I want to give you guys an example of a deal that our team just closed last week. It's in Milford, Ohio. Nice suburb outside Cincinnati. Great market, by the way. When you look in Investor Lift on God Mode, what you see is that the gross expected profit in Milford today is around $89,000. And what we've seen over the last 2 or 3 months is that we expect to make at least around 20% of gross profit. So in this case, we expected to make about $17,000. I think we're making about $20K on this deal, something like that. But this gives you sort of an idea, like, what you should expect to make if you go into that market as a wholesale fee. So get in God mode, look at gross profit, look at resale price as well. You're going to get a very good indication of what you should expect to make here. Robert, did I miss anything else that I should be telling them?
Yeah, there's one metric that we've looked at too, and I haven't tested this on the smaller markets, but on the bigger markets, what we're looking at is average sale price on God mode. When we look at average sale prices, the assignment fees tend to be around 8%. They fluctuate up and down, but across the board is like a general rule of thumb. We expect the assignment fees to be about 8% of the average sale price in that market. Assuming you have a good team and you're signing them up at good prices, but that's another metric. But yeah, I think 20% is probably a good metric to look at, especially in the smaller markets where the 8% maybe doesn't apply.
They're pretty close. So right here, it's saying Milford is 195 average resale. So 8%, you're looking around 16, 17K. So they're pretty close. Yeah. Cool. Yeah. So now what you guys have been waiting for, at this point, you should have sort of, what your skill level's at currently today. I know where we were last summer. So if you guys are newer or you don't feel as experienced, don't even worry about it, because last summer we were total rookies. Determine your buyer pool and the size of the market, determine your wholesale fee. And next,
Josh, can we just stop for a second? Because I want to reshare this on the investor group. And a lot of people probably don't know about your history. They don't know. They probably think when they see you that you've been wholesaling for forever. And you're like, can you tell your story real quick? If people are watching this today and they don't know what you were doing before last summer?
Yeah, so guys, we were doing luxury building in Northern Virginia. I think we're doing about 15, 20 projects a year. We had some very small wholesales here and there, nothing major. Take it back to last June or July, we did our first deal in Orlando. I didn't honestly think that virtual wholesaling was going to be doable, to be honest with you guys. And we got this.
Wow, it's convinced you.
It took a long time to convince me.
Months. I think
So
almost a year, maybe.
first deal's like an absentee owner in, I think it was Orlando, and she's like an older individual. She's tired of being a landlord. Her husband passed away. She just wants to be done. We locked the deal up, and we actually, at that time, I didn't know a whole lot about InvestorLift. So at that time, we JV'd it with somebody in that Orlando market, and we sold it in like 2 or 3 or 4 weeks, something like that. We ended up with like a $30K assignment fee on the first one.
What did you pay the JV partner?
I think she got like 20% or something like that at that time.
That's not bad.
It wasn't too bad. But it turned out that her buyer was actually a mega buyer. So her buyer was like a massive hedge fund.
Someone from God mode.
Probably. So we didn't realize that her buyer was one of these massive players. And she was basically doing like, I don't even know. But that deal like opened her mindset to like, oh my God, like look what's possible out there. Roll it forward to like August, we stopped building entirely. Roll it forward a couple months, it was a little bit slow. And then I started to doubt, like, is this really going to pan out? And
wait, Josh, real quick, back up for a second.
Yep.
Can you tell people what you hit the first month, though? Because your first month was really impressive.
We did about 190,000 in the first month.
I think that's the biggest first month I've ever heard for a wholesaler.
But then we still didn't have all the systems in place. We didn't know how the team was going to be laid out. We didn't have a sales process. We didn't have the right software, the systems. We didn't really have InvestorLift working the way. We didn't have anything working properly. So then we might, to be honest, Robert, we might have had a little bit of a lucky first month. But roll it forward, we figured out like how to put everything in place now. And since January, we've doubled the production every month since January to this month.
It's incredible.
So guys, virtual wholesaling really works. It's a phenomenal business. I do want to caveat this. So back in last fall, we were thinking like we should just go out and crush 18 markets right now. And what I'm realizing now, like in the last few months, is that half of those original 18 markets didn't really pan out. Some of them really did well, and some others like were whatever. And I think what we're about to talk to you about next is the reason why. So market selection, like get hyper focused on the next 5 things, because that's what's going to ultimately, in my opinion, really define the success moving forward.
100%.
So here's a summary, and we're going to get into detail on each of these. I guess, Robert, we're going to be talking about where the seller is likely to sell to investors right now. So that type of market. Where can you get the best ROI? Where are the migration patterns? What are they showing? Areas that have inventory cash buyers want, and velocity of cash deals in a market. And those 5 things together are the market signals for you guys tonight to determine, like, is this a place that I should go do business? And keep in mind, keep within the constraints of the first 3 things we talked about. Are you going to start with smaller markets or bigger markets? You know, keep in mind your experience.
Yeah.
So
Let's dive in.
The first market signal that we're seeing right now, obviously with COVID, a lot of markets like in Northern Virginia, you're not feeling it, and you probably won't, but there is distress out there in some places. So, I mean, across the country, we got over 8 million evictions pending. We got over 3 million notice of defaults pending. Some markets have really high unemployment right now. Like even Pittsburgh has over 8% unemployment. These are the things that you need to be looking at to determine, does this market have some short-term distress that could act as sort of a immediate, deal flow indicator? I put up some of the other websites that we look at. So this came from Bureau of Labor Statistics. Realty Track is tracking monthly, pre-foreclosure rates. So is the Consumer Financial Protection Bureau. Black Knight is also tracking eviction rates throughout multiple markets. So looking at higher eviction rates, looking at higher notice of default rates, these are markets where there's going to be some distress, and it's going to be a lot of sellers that want cash deals to happen. On the radar right now, I don't know, Robert, if you've looked at this, but like South Carolina as a state has some of the highest eviction rates in the country. I think it's like 15 counties.
You know what's crazy? I'm gonna tell you something that no one is really talking about. So I was talking to one of the top short sale experts in the entire world yesterday.
Mm-hmm.
You know, he told me,
Nope.
he said foreclosures now, I haven't verified this, but this is what he told me. He said foreclosures now are at a higher rate than they were in 2008. No one's talking about it, but he said if you look at the data, that's what's actually going on, which is mind-boggling. Everyone's like, oh, no, it's nothing to be nothing but 2000. I haven't verified this, by the way. If you want to fact check this, fact check it below, because as soon as I heard that, I was like, I got to fact check this. But, I mean, this is one of the top short sales were telling me this, so pretty credible source. If that's true, then that's freaking crazy.
I've been following Ken McElroy a lot on this, guys. Ken McElroy is a beast. I would definitely follow that guy. One of the things that he's been saying, which I've been researching, is you have 1 million units of supply nationwide right now, which is creating a strong seller's market. But if we add 1.7 million units of supply across the country, now we transition into a buyer's market in many of these submarkets. So
100%.
Look where the evictions and the notice of defaults are happening, because that's where inventory could increase dramatically. And that's also where you could wholesale a lot of inventory as well. And by the way, guys, I'm not just preaching to you guys tonight. Like, in our own data today, we're already starting to see pre-foreclosures happening in a lot of different markets that we're marketing in. So data's already out there. Pre-foreclosures are happening right now. The difference I see is that folks have a lot of equity. So you're talking to a seller, they have like 30, 40, 50% equity, which is very different from 2008.
Yeah, but I jump in and say something here. The one thing, it's fake. Not fake.
Robert, you got to say that again,
what's
man.
Happened is it's 100% fake. Okay, because here's what happens every year. People that live in a house and can't afford that, typically what happens is if they can't afford it, what do? They sell it and they go and they rent. Okay?
Yep.
They'll downsize to something. Now, if you're living in your house today and you can't afford it, but there's no incentive for you to actually sell, what are you going to do? Are you going to sell and go rent, or are you going to stay and live for free? Obviously, you're going to stay and live for free. Like, I was honest, like, if I was like jammed up for cash, and like people are just like, hey, you can stay and live for free, like, for sure you're going to do that, right? All the people that sold since COVID hit, they're not selling. A few will, but most of them are not selling. So the supply of houses has been artificially manipulated, artificially decreased. I
agree.
You are staying at home, so your home, the demand, right? Demand for homes has been driven up. So it's created this artificial scenario, this fake scenario, where that's pushing prices to insane levels. But as soon as the government stops manipulating the economy, like, there's going to be an end to this story. Okay, markets always correct. There's never been a market in the history of the world that hasn't corrected. Okay, and what's going on is not normal. It's fake, and it will correct. I don't know when. I don't know what it'll look like, but it's fake, and just think about that. And think about how you can take advantage of that opportunity. Think about, if I'm a wholesaler, how does that benefit me or whoever?
So, guys, market signal number one, you got the idea: employment rates, unemployment rates, notice of evictions, notice of defaults. Those are the three main things that we're looking at to determine sort of short-term distress. Moving along, market signal number two, and this is, as I learned from Robert, and it makes a lot of sense to me as well. This is whether it's online or even offline marketing. The number one metric of sort of what's happening in a market is Google search. So, Robert, you're a whiz on the computers. You want to give them some ideas about how they can use Google to make a determination on a market?
Yeah, so, I mean, the main thing is, well, first of all, before I dive into Google, I'll tell you why Google is important. Google, it gives you predictable, scalable return on ad spend. Okay, of all the clients we have, we got tons of clients now. Everyone that's earning over half a million, they're spending 900% of their ad budget on one channel, and that's Google Ads. Okay, because it's all, and like, I mean, think about cold calling. If you want to double your leads in a month with cold calling, what do you got to do? Hire twice as many people, train twice as many people, manage twice as many people, buy twice as much data, skip twice as much data. Like, it's just super hard to scale Google Ads. If I go double my lead flow, I just double my budget, right? You can have diminishing returns, but the diminishing returns on Google Ads are a lot less than most of the other channels. So everyone that's big is going to do Google Ads. So that's the first thing. Second thing is, if you have investor lift and you're smart, you can figure out exactly what your return on ads and spend $1. So you can predict how much money you're going to make before you ever spend the money. Okay, it's very simple. Like, all these agencies, they're like, oh, we're going to test a million things, and then we're going to double down on the things that work. I'm like, yeah, but that costs a lot of money, because 95% of the stuff you're going to test is not going to work, right? And it's lazy, right? I'm like, why don't we just do the math up front, figure out where we're going to make the money? Like, Josh, you just started doing this. That's how you hit your 4 deals, right? Because I talked to you about this last week. Remember that?
Yeah.
So my connection is breaking up. I'm going to turn off my camera, so hopefully I can get a better audio.
I was going to say your audio is a little choppy.
Okay, hopefully without video. I'm going to step inside too. See if
that's better now. That's better.
Is that better?
That's better now. Yeah.
Okay, so way better? Okay, awesome.
Way better.
All right,
way better.
Instead of wasting the money just testing stuff and seeing what hits, why not just do the math up front, okay? So people say, what is the math, okay? The math is the only 2 metrics that matter in a wholesaling business. I'll tell you what they are. There's 2. Write this down. If you're watching this, write these 2 down. Number 1 is return on ad spend. For every dollar I spend, how many dollars am I making back? Okay. Ideally, what we want to do is we want to hit keywords and markets where we can achieve 10x to 20x return on ad spend. Okay. Most businesses are between 4 and 6, but I always tell people, try to hit 10 to 20 because this is possible. Okay. So the second metric is, what is the cash conversion cycle? How long does it take me to turn $1 into $10 or $1 into $20? Okay. If you can just get your return on ad spend up and get your cash conversion cycle down, nothing else freaking matters, right? Nothing else matters. That's all that really matters, right? So then the question becomes, okay, how do you figure out your return on ad spend? How can you do that before spending money? Okay. Well, first of all, if you have investor lift, right, you can go into God mode and you can do some analysis. It'll show you all the average sale prices, the gross profits of any market in America. Okay, so you can either use the analysis that Josh does, where he likes to look at like 20% of the gross profit in that. In the hotter markets, I'll usually look at like 8% of the average sale price. That gives me a good sense of what the average assignment fee should be. So now I know how much money I'm going to be making off an assignment, right? And then you just got to figure out, what is it going to cost you to get a deal, okay? So to get a deal, the first thing we got to figure out is how much is it going to cost us to get a click, okay? So words, right? And Josh has it open on there. And what you can do is you can type in any keyword in any market, and they're going to tell you what the low and high bid is for the top of the page. Okay, we're top of the page low, top of the page high. Now, top of the page high, that's what you're going to be paying if, like, let's say you have like a carrot site that loads really slow, or like some sort of website that just is not performing well. Google will actually penalize you for that and make you pay way more. Usually it's like between 2 and 5x, okay, what the low price is. And then the low price is what you should probably be paying around that if you have an investor lift site, because we have the best Google page speed scores, really high experience score with Google, and Google rewards us with that and we're able to bid a lot less for the same click than our competitors. I'll give you an idea how this plays out. Like, I think it was Orlando we're looking at the other day. The competitors were paying over 100. I think it was like the top of page high was 140. Top of the page low was like 28. Okay, so that shows you how big of a variance there can be there. So I usually, and then the other thing too is Google's a second price auction. So you can actually bid a little bit above that. And you don't actually have to pay your bid. You only have to pay what the bid is under you. So if you want to make sure you get all the volume, you can just bid a little bit above you. It doesn't actually cost you anything. You can kind of guarantee that you're going to get all the volume. All right. So now we know how much it's going to cost us to get a click. And then what we do is we look at our Google Analytics. We see what is our click to lead conversion rate. Okay. So most companies should be around like 9-10%. Okay. 12% maybe if you got really good traffic you're saying there. Okay, so that means for every, let's say it's costing me, I don't know, $15 per click.
Robert, we're losing you again, Robert.
$50. Okay, sorry, can you hear me? Can you hear me, Josh?
Yeah, can you repeat that? We lost you there, Robert.
Yeah, sorry. So, okay, so your cost per click multiplied by or divided by your conversion rate is going to be your cost per lead. So if I'm paying $15 per click, I'm converting 1 in 10. It's going to cost me $150 per lead. So I know what's going to cost me per lead. Then the next conversion rate I got to look at is what is my lead to deal conversion rate, right? The top teams are around 10%. Okay. Lesser performing teams are sometimes 20% or 30%. Or sorry, what am I saying? The top performing teams are 1 in 10. The less performing teams are 1 in 20 or 1 in 30, somewhere in there. Okay, but let's say I'm on a top team and I'm converting 1 in 10 leads to deals. Well, then if I can get a lead for $150, then I can get a deal for $1,500, right? So I know what my assignment fee is going to be now, and I know what it's going to cost me to get that deal. Divide your assignment fee by the cost per deal. Now you know exactly what return on ad spend you're going to have. And all you got to do is go try to hit a keyword in a market that's going to give you between 10 and 20x. If you do that, it actually doesn't matter what the market is. All that matters is, can I get 10 to 20x? It doesn't actually matter at all what your cost per lead is, right? A lot of people are fixated on cost per lead. But like, if you had a super, super hot lead in a super high profit market, like a lot of people would be willing to pay $1,000 or even $5,000 for a lead if it was super hot in a super hot market where you're making $50,000 assignment fees, right? So don't fixate on cost per lead. Calculate your return on ad spend, and then use those calculations to predict in advance what you're going to be making in those markets on those keywords, and then just do the work, do the math, create your list of keywords and markets, and then just launch your campaigns at those keywords in those markets. It's hard. If you do that, it's hard to screw that up. It's very hard to screw that up. You should, unless you're a moron, you should make a lot of money.
So Robert, let's say they're newer and they're doing offline marketing only. I mean, would you agree that Google kind of gives you an indication of, I've seen this forecast from Google as well. So like, this is Woodbridge, Virginia right here. It kind of shows you that we buy houses, there's not a whole lot of volume in that market.
Yeah, I mean, they don't correlate 100%, but they're definitely very strongly correlated, right? Because if there's a lot of people bidding on keywords, there's also obviously probably a lot of people writing direct mail, right?
Right.
Someone's asking, what do you mean by keywords? Yeah, so I'm going to break this down and make it really simple. So with Google Ads, basically what you're doing, you know, when you go on Google and you search for something, the top few results will pop up. They'll be highlighted and they'll say ad beside them. So what people are basically doing is they're bidding to have their ad showing up at the top of whatever search term it is. Sell my house fast is one of the top search phrases out there right now. I can tell you, Nick just shared this on TikTok yesterday with Chris, Chris Cole, I think. So I'll share this. His top keyword right now nationwide is cash home buyers. Write that down. Cash home buyers. Okay. So what I can do is I can pay money, basically bid to have my website show up at the very top of Google. And a lot of people are going to click on the first result on Google when they're searching for those keywords. Now you don't have to pay to show up. You only have to pay when someone actually clicks, right?
Mm-hmm.
So every time someone clicks on that keyword, it's very simple. People make Google ads way too complicated. All you're doing is you say, hey, Google, I'll pay for clicks on this keyword, and that keyword. You make a list of them. And then Google will go throw your ads up, throw your website up in the search results on those. And then you don't have to pay for them to show up. You only pay when people actually click on them. Okay, so that's what we mean by keywords, is the keywords are just the search phrases that we're bidding on. Hopefully that answers your question.
But guys, you can blow through ad spend on Google like there is no tomorrow. I think a lot of folks will tell you that. So my recommendation would be to like get your feet off the ground first, like do the offline stuff first, get your pipeline going before you even think about Google ads. I think we blew like 30 grand in our first like month or two, didn't get a whole lot of return.
Yeah, can I explain why that is? By the way, the
Yeah.
reason why that is when you first start off on Google Ads runs on machine learning and AI. So the algorithms are very stupid until you feed them data, right? Your ads are going to suck until you get a bunch of data, right? So you should not be doing Google Ads at all, or even thinking about it, unless you have $25,000 at least that you're willing to just blow and not get anything back for. Because that's usually about what it costs to get your account just warmed up before you even start getting any money back. So if you're watching this and you're not comfortable with just being able to just drop $25,000 and get nothing back for it, do not do Google Ads. Okay. Once you get it like dialed in, Google Ads is the best, most powerful channel out there. It's where all the big dogs play.
Yeah.
Right. Everyone else is skip tracing. They're buying lists from the same providers. They're skip tracing with the same skip tracers. Everyone is tens of thousands of people coming to this industry every year. They all buy the same lists, skip trace with the same skip tracers. They're calling the same people. The 99% is fighting down at the bottom. Okay. Yep. And what the pros realize is, hey, I don't want to compete with everyone else. I'm just going to jump up to the top to Google Ads where the big dogs play. I'm going to compete there because I got the money to do it. But if you don't have the money to do it, don't do it because you will get crushed.
Yep. I'd agree with that. I mean, it's funny you say that because I think we were like 30 grand. So we're not far off from the metric of losing 25 before you start to get back.
100%. I see that every time.
But even for you guys that are offline, I still think there's interesting information in the Google Ads search. So like Woodbridge here, $96 cost per click. That's pretty high. And as you can see, like their forecast is pretty low deal volume. So even just based on this, I wouldn't expect Woodbridge to be a great market to go into as a home buyer.
Yeah, that's crazy. 96, that's super. I mean, if you had a 10% conversion rate, that's $960 per lead.
Yeah.
Right. And let's say you're converting 1 in 10 leads to deals. That's $9,600 per deal.
Yeah.
Right. So even if you had, so let's just round it to 10K. Let's say you had an average assignment fee of 30,000. I mean, you're looking at only a 3x return on ad spend, way too low.
And you can see from the other metrics in Woodbridge that, well, actually, we're going to get to that, but there's no margin there for this type of a CPC. So just based on this, whether you're online or whether you're offline, Google has a lot of good insight for whether this is going to be a market that's going to be good for you. The other thing that Robert and I talked about recently was what we call asymmetries. Is there high volume but low CPC? You know, if there's high volume of leads but low cost per click, that's sort of how you boost your return on ad spend. We're running out of time, so we're going to have to fly through signals 3, 4, and 5. So signal number 3 is we're looking at markets in our company that have short-term distress but long-term growth. And some of the things that you can look at for that type of data, whether it's a primary, secondary, even a tertiary market, you can look at monster.com to see what kind of job postings are out there, what kind of companies are moving to the area. You can look at Census Bureau data. By the way, this is a great website to dig through. It gives you inventory on existing, single family, townhouse, condo units, all sorts of stuff that you want to know, ratios, demographics. So Go on Monster, go on Census Bureau, see if it's a growing area. The other thing that's a really good indicator of growth in a region is the U-Haul report. Are there moving trucks moving in more so than moving out? U-Haul has a report on this, and so does, what's the other big moving company, Robert?
Oh, geez, I don't know. But I'll tell you this. I was in LA until November. I was the last person on my entire hall in my condo to leave. Everyone's leaving to Nevada, Phoenix, Austin, and Florida. I was literally the last one to leave. So do not buy in LA.
and this signal right here, interestingly enough, does seem to line up a lot with where there's a lot of buyer activity right now. Like where the deals are selling quickly, the fastest, for the highest margin. This does align a lot of the times. So just keep it in mind. You're looking at a lot of the Sun Belt areas, the South, Southwest. Robert, anything else we should touch on for this one?
Yeah, and just like the background here is like, who's watching this is the buy and hold guys are watching this. Like Austin, for example, I was not planning on moving back to Virginia. I was going to move to Austin. I went down to Austin. I was shopping with Nick Perry for houses for a bit, and I couldn't find anything. Everything I put an offer on, there was 10 or 15 offers on already. I'm like, dude, I'm a real estate investor. I'm not overpaying for anything. Like, forget about it. I'll wait a few years. But like, I mean, when like the buy and hold guys, the hedge funds, like all those guys are watching this, and they when they see massive migrations happening, the biggest migrations in the history of America have happened in the last 12 months. And you would be insane to not think that that's going to impact real estate prices. They are impacting real estate prices massively right now. So, I mean, if they're looking at that data, you need to be looking at that data because they're looking at that data to figure out where to buy. And if you're trying to sell to buyers, you want to get a premium, you know exactly where to go.
And interestingly enough, like a lot of these hedge funds, I know they're looking at this metric because almost every market they're in, most of the ones that we deal with, I mean, they're high growth markets, and their markets, their buy boxes seem like they change like every 6 months. So like even some secondary markets that I didn't think they were looking into, they're now buying in. So, and I think it's because of probably this, they see massive, migration coming in. So good point on the buy and hold. I wasn't thinking about that, but yeah, buy and hold for this for sure. And so finally, market signal number 4, where are the deals happening? And you guys have like videos online about going on ListSource and all these different places. But here's the thing, guys, the data's already here. It's already aligned. It's in a graph, in a bar graph for you by zip code, by city, by scatter plot. It's already here on Investor Lift. So if you want to know, is this a market that has velocity of cash deals? Here's a screenshot right here of Virginia. You can break down from the top, Virginia Beach, all the way down to the bottom, Winchester. Winchester had 88 deals in the last, I believe, 6 months, Robert. Is that correct? Roughly last 6 months, or is it?
So this goes, when I did this, I believe this one goes back 12 months.
12 months. Okay.
Yeah.
So we're showing deal volume over 12.
The one thing you got to think about, so this is not sensitized, and you've mentioned on the site, it's not sensitized based on population. Okay, so there's going to be an update on this that I'm going to do that's going to bring in the Census Bureau data, because normally what I would do is I would take this data, because there could be an area where there's just like a ton of flips just because there's like a big population.
Yeah.
Right? But what you really want to look at is like flips per household. Like how many flips, what is the density of flips in the area, right? That's a really good indicator of whether or not it's a super hot market. So on probably an update, probably the next 30 days or so, I'll actually be introducing those. Now you can just take this and divide it like Josh is saying here, but that'll probably be coming in the next like 30 or so days.
So yeah, for now, just go on the Census Bureau website, divide it out. It's really easy math. If you're a newer investor, you're looking at the slide right here. There's all sorts of markets to get your feet wet into. I mean, I see Danville, Virginia. I see Chester, Virginia. I see Williamsburg, Suffolk, Roanoke. There's all sorts of markets here that you don't have to be, Godzilla of the investing world to get your feet into this and get going. And all the data for every state is on Investor Lift by zip and city. And finally, market signal number 5. Are the cash buyers actually buying? Are they there? And what areas of that market are they buying in? So here you see more of a screenshot. Like this is Woodbridge, Virginia. You can kind of see like where the buyers that are paying cash working and where are they not working. You see all these open areas, no activities happening. So if you're somebody who's like, I don't know if you can see my cursor, but if you're out here, don't expect to get an assignment fee out here in the sticks, because I don't see anything happening over there. But on the other hand, if you're down here in the center here, there's action happening. So yeah, maybe there are some deals in Woodbridge, but be where the action's happening. So that's another signal you're going to get off of Investor Lift that's going to keep you in the right neighborhoods and the right zip codes versus the wrong areas.
This is going to save you from wasting your time. Like I had some guys where for every 5 virtual deals they would sell, they would sign up, get under contract, they would only be able to close 1 out of 5. Now we completely flipped that just in like 30, 60 days. And it's because of this, because when you go in and you see there's no investment activity, like don't bother signing up that deal. It's going to be a complete waste of time. I was talking to a client a few months ago. They sent me a deal. They're like, what do you think, Robert? Should I sign this up? And I go into Godwin. There's like 5 deals around it. I'm like, no freaking way. Dude, you're never going to be able to sell this thing. He's like, yeah, but I'm getting it for 20 cents on the dollar. I'm like, it doesn't matter if there's not buyers. Like, do you want to take it as a buy and hold? He's like, no, I don't want it as a buy and hold. I'm like, okay, well, you're not going to be able to find a buyer. So good luck with that. They called me back like a month later. He's like, dude, that was miserable. That was such a miserable experience. You're right. I should never have done that. I wasted so much time. I could have done 5 deals in the amount of time I wasted on that one.
So guys, those are the 5 signals tonight. I think next time, Robert, we're going to show them some examples of some different markets that they might want to consider or that meet some of these metrics. But I would encourage all you guys watching tonight, do your homework, do your research, pick some markets that align with these things. If you do your homework, you dig into the data, you're going to be a lot more successful than someone who's just flying by the seat of their pants.
Yeah, 100%.
And the 5 signals tonight, guys, in my opinion, that's why like half of our markets did not perform. So out of the original 18, at least half of them were not good markets. When you look at these signals, they didn't fit these signals. And that's why there wasn't enough deal volume. There weren't motivated sellers. We're not getting the ROI that we're hoping to get. So really dig in the data, guys. Real estate is a data industry these days, as Robert has demonstrated.
There's a reason why our clients are the biggest wholesalers in the country. It's because we do the math. You can't just fly by the seat of your pants. If you want to compete at the highest level, it's basic 6th grade math that anyone can do. Literally anyone can do. If you pass the 6th grade, you can do the math. It takes some time to do the math, but you got to do it. If you don't do it, you're wasting money and you will not be able to compete at the highest level. We do it. No one else does. And that's why our clients are the biggest and most profitable wholesalers in the country.
And guys, if you didn't notice, like it's all spoon-fed for you. Signal number 5, spoon-fed for you. Number 4 is spoon-fed for you. 1 and 2 and 3, you got to do some research on your own, and 1 as well. But even in terms of return, that's also spoon-fed for you. Don't go into a market. Like, why would I not go into Woodbridge right now as an investor? Why would I not even consider it? I'll tell you why. Because if you zoom in right there, the median gross profit is between 16 and average is 50. That's a little sketch to me. Like I don't think as a wholesaler I'm going to be making money here probably. If the median profit's only 16, man, I'm going to make like 2 or 3K. I'm going to spend that to get the deal. So,
yeah, it's almost $100 per click, which means like, so like good luck. Like if I saw these metrics, I would knock that market out in 2 seconds. I'd be like, this is a waste of money right here.
Yes, if you've demonstrated anything to you guys tonight, that probably Woodbridge is not a market you guys want to consider strongly tonight.
Maybe cold calling you, like maybe it's probably competitive on cold calling too, but like specifically on Google. Like, but here's the thing. We haven't showed you the examples of markets where we're like, damn, like this is like Josh and I, we were doing an exercise remember like last Saturday, we were going through this. Yeah. We looked at like 6 or 7 cities, most of them had between a 2 and 5x anticipated return ad spend.
Yep.
And then we hit one that was like 17x. We're like,
Yep.
damn, let's like that. There you go, jackpot. And it took us what, like 15 minutes to do that, probably.
Yep. I mean,
So,
that's why some of these guys are getting like 22x return on their ad spend.
Yeah, because they're doing the math.
But guys, it starts with the market selection. So pick the right markets out of the gate. If not, your lead generation is just going to be, you're working with a handicap if you don't.
By the way, if enough people are interested, post your email below if you want this, or DM me if you want this. I will send you my calculator. I have a calculator that I've built to do this math. It's already pre-built. So if you're watching this and you're like, hey, I'm not sure exactly how to do the math, or like I didn't catch it all. I know my audio was choppy and stuff. Either DM me or drop your email below, and I will DM you back my calculator or email it to you. Okay, so post it down below, and then share this because I'm sure your friends want this too. Okay, I normally only give that to clients, but you guys, I'm gonna
remember when I looked at your calculator, I think 40x is doable right now.
It is possible.
I don't think people are talking about it, but 40x return is doable.
Mm-hmm.
So if you guys do your homework, if you guys look at the data, if you guys really dig into the stuff we talked about tonight, and I guess we'll leave you with one last thing. If you want to join the nation's top investors, you still can. It's Robert. I think there's still like a coupon code or something to get in at like a.
There is. Now, there's a couple things I have to say about this before you announce it. First of all, our wait list is 6 to 8 weeks deep. Okay, we didn't know we were going to go viral. We went viral. We announced it 5 weeks ago. We sold $1.3 million of licenses just in the last 5 weeks. Okay, so we're going viral, and our team is getting really worried that we're not going to be able to, like that. The wait list is just getting out of hand. So we're going to be completely shutting off access probably starting this next week, where you won't even be able to buy it. You will have to, it'll just be invite only, probably midway next week. I'm talking to my tech team, gonna get their input on it, but I was talking to Liza yesterday and we're like, we can't, like, this is blowing up too fast. We got to slow it down. So we're probably gonna have to shut it down for at least like 30 to 90 days while we get through our wait list. There is a 6 to 8 week wait list right now. But I will keep it open at least probably through like Monday. Because I know a lot of people are probably watching this right now. But if you're going to take action on it right now, because it's probably we don't have an option. We can't handle the demand right now. It's insane. A lot of people are seeing this and they're like, hey, no one's done this before. I need this. It solves all my problems. And
guys, this is why there's mega wholesalers out there right now. Like I heard Kent Clothier talk about wholesaling last year, and what he said right out of the gate was like, it starts with the buyers.
Mm-hmm.
Well, there's never been a platform to get the buyers anything close to this right now. And if you start from the back of the bus and work your way forward and find the right geographies to work in, and you already got the buyers in your pocket, you're going to explode. And honestly, I was really hesitant. I was doubtful last year, but I mean, we're doing massive growth right now. I think we're going to hit $500,000 this month. I expect to double it by the summer. I want to go big. And I mean, I don't see any opportunity in real estate right now that's even close to this. I mean, do you want to get in on a commercial deal where you're getting a small fraction of the cash flow, or do you want to get on this where you can make 7 or maybe even 8 figures a month? I mean, that's what this software has allowed businesses like myself. I mean, to dream of levels we never could have imagined a year ago.
Yeah.
So,
by the way, I'm just going to drop some names on who's using this. Okay. Drop some names. You guys ever watch HGTV? Tarkal Musa from HGTV. Use it, powered by Investor Lift. Okay. We took him to over 2 million a month. Cody Sperber, Carlos Reyes, Don Costa is about to sign up. I was just with him here. Jerry Green, House of America. Who else? I mean, like anyone who's big.
Corey Geary.
In the industry. Corey Geary.
Nick Perry.
Anyone who's big. I was just down here in Florida for this conference. Literally half of the guys at the conference that are probably 90% of the guys who are doing, $1 million plus per month down at this conference were all powered by Investor Lift. There's one panel on the stage, literally 50% of the people on the stage were powered by Investor Lift. Okay, that's not by accident. It's because they see that this is the opportunity. This is going to
Guys,
be the biggest opportunity of 2021.
This is the gold rush in real estate, guys. Like for myself, why did I stop building? Because honestly, none of us got into this business to swing a hammer. We got in this business to make money, invest it, and own assets, not to swing a hammer. And when I saw what was possible with this, I don't want to swing a hammer anymore.
Yeah.
So thanks, Robert.
Work smart, not hard. You don't want to be working hard. Forget about it. I want to make stacks of cash without having to work hard. Hector's asking, Robert, are you in the DC area now? No, I'm stranded in Florida right now. Stranded for the next 2 days because of weather. But I will be back in the Virginia area, hopefully, God willing, unless there's a hurricane that comes through or something. Hopefully I'll be back Wednesday. So hit me up.
So guys, if you're struggling to do deals in your backyard, this is not going to break the bank. Trust me, I know it won't break the bank. Your first deal will more than pay for it. Get out of your backyard as soon as possible. That's my advice to you guys tonight. Follow our 5 signals, pick your markets. There's so many options out there. When you start to think beyond your backyard, there's just so many options that you can consider from here to, can we do Puerto Rico or we can't do Puerto Rico yet?
We're going to do Puerto Rico.
Okay.
I've already got a lot of people. By the way, I just did something, Josh. Okay. I just did something. We did a pre-sale. The pre-sale ended. There's no more coupon codes active right now. But since I love you, Josh, and you're amazing, you crush it, I just extended your pre-sale coupon for the next few days, 50% off. It drops the price down to $27.84 per year, okay? For the entire year. Guys, you JV one deal, you're making twice that back day one, okay? So we're giving it to you almost free. I can't give it away for free, but I want to give it to you at a price that's just no brainer. So you start using it. Next year it's going to go up to 100%. Okay, and I know you're going to spend a lot of money skip tracing, texting, all that. So I want to get you on for pretty much free. But link is Josh that's hosting this. I'll repeat: $2,784 for an entire year. You don't get billed again until next year. Okay, there is a 6 to 8 week wait list until you get your access, but I'm going to reset your bill date as soon as I give you your login. Okay, so you pay now and put your deposit down now. As soon as you'll start getting videos 5 days before you get your login. Okay, how do I sign up? Go to joshcohen.investorlift.com. Okay, sign up there. We were charging $120,000 for this for Enterprise, and this is going to be 90% of what Enterprise has. Okay, for like $3,000, less than $3,000. Okay, so joshcohen.investorlift.com. When you get there, on mobile, sometimes the coupon code doesn't show. The area where you can type in the coupon code doesn't show up. You got to click the little down arrow, and it'll pop up and ask you which coupon code do you have, and then type in Josh Cohen there, and then you should get 50% off, which drops it down to $27.84. Okay. So it's as close to free as it's ever going to get.
Dude, that's like a giveaway price, honestly, man.
This conference, I told them that I was selling it for $5,400. They're like, you're insane. Why? Like, you could be charging $100,000. I'm like, I was charging $100,000. They're like, well, why did you lower the price? I'm like, well, I'm trying to, help people out, and I'd rather have more people, more people.
So guys, go out, pick your markets tonight. We paid way more than that when we signed up last summer. We've made 100 times back whatever we paid, if not 1,000. So guys, it's been great. Robert, thanks for joining us.
It's been a pleasure.
I think next time we're going to give them some examples maybe of some markets that they might want to consider.
Yeah, let's do it. I mean, we're going to be letting the cat out of the bag though if we do that one. But you know what? Screw it. Let's do it. Let's do it. Let's let the cat out of the bag. What are the hottest markets in America right now? Some
value, man. We got to get these guys to stop fighting over scraps. I mean, there's so many.
As soon as we mention it, though, they're not going to be the hottest anymore because everyone's going to go in. That's one of the things. But then, it'll adjust. We'll keep on adjusting. I don't care. We're going to give value.
There's so much opportunity out there, guys. Well, yeah. Robert, thanks for joining us from Florida. And thank you guys for tuning in. Watch this, guys. Watch this again. I can't stress enough the 5 signals, the 5 market signals to go after. And if you want to join up on Investor Lift, Robert's giving you, what is it, a 5-day option, 5-day pass to get
I'll
50%
keep
off?
it up for the next 5 days, and then the coupon's going down, and also it's going to be invite only. You will have to reach out to existing Investor Lift member to be able to register after that, because we just can't keep up with it. Our onboarding team is just like, they're scared right now because of how many signups we're getting every day. It's gone completely viral these last few weeks. Steve is asking, you're giving the calculator to us. Yeah, Steve, just send me a DM. I know Steve is already on Investor Lift. He was actually one of the first people to sign up. He's already got access. Steve, are you enjoying Investor Lift so far, by the way? Drop in the DMs if you're enjoying Investor Lift so far. But yeah, Steve, I will send you the calculator so you can use it. And then you know what I'll do also for the Investor Lift members is I'll put up a tutorial probably tomorrow or Tuesday on how to use that calculator, click by click, how to go into Google Ads, where to click by click go to do that research. So you just follow that. Again, 6th grade math. It's nothing complicated. Anyone can figure this stuff out, but no one's doing it. Literally no one. We're the only ones that are doing it, and that's why we're crushing it.
So last time, guys, 50% off until Wednesday. Coupon, then it goes away forever. It's well worth the money, guys. Get on there. Take your career to the next level. Do what makes money quickly, efficiently, and look at myself like with the least amount of stress. And if you guys have questions, don't hesitate to reach out. Drop me a holler. Robert, thanks for tuning in from Florida.
Thanks everyone that's joined. It's been a lot of fun. We'll let's do this again next week, Josh. We've been over our groove. We were doing these weekly. We got to start doing them weekly again.
We got to give them some markets next week to go after.
All right.
Give them what they want. Give them some value.
Give the people what they want. Next Wednesday. Let's do it. All right, guys.
Guys, thanks for joining us on the live show tonight. If you're on Facebook, make sure to join our Facebook group. It's facebook.com/dealmakernation. Tons of great content in that group. Tons of great people. Make sure you're joining the community, join the network, and learning from other like-minded entrepreneurs. Also on YouTube, make sure to subscribe to our channel. You can find it at youtube.com/dealmakernation. Thanks for joining us on the show tonight, and we'll see you next.